Hello, my name is Dr. George Mochocki, and welcome to Management Tool. Ooh, made that a little bit too big. Hang on a second. Let me just bring this back into view. Bringing it at 200. Okay. Welcome to Management 218, Corporate Finance. This is Chapter 2. This is a quick overview. Make sure you read the book. Good book, a little complicated. Some of you say, hey, am I going to be challenged? Trust me, you'll be challenged with this book, with this course. So don't worry about the challenge. Read this. Um, you participate, you're taking me either on an online class or a face to face class, and this is just a quick overview of what the key terms you're supposed to be at least exposed to. All right. So here we're going to talk. This is kind of like a repeat, from your accounting 1 and 2, and a little bit of your introduction to business if you're taking this at Harper. So this is a quick overview. Read the book. Participate in a discussion in the classroom. Participate in the discussion board online, and you'll do well. And you make sure that as you're going forward now, the problem's going to start getting a little bit harder, the exams and everything else. So make sure you utilize the YouTube provided by the video, by the author, their help, their calculator, their assessment tools. All this is to make you. You're not going to be an expert in finance, but you'll at least be exposed to some of the terminology, and you won't be so won't have that anxiety attack. Oh, it's okay. I understand. It's a little complicated, but I understand and I can figure it out. Okay, so let's talk about the income statement. Income statement, bottom of the line. Remember, a quick review from your accounting classes. What's the income statement? It's the money you got coming in, how much money you got left. So, income statement, real quickly overview, is your bottom line, right? It's after profit, everything else. That is profit after cost, expenses, and the taxes. Remember, revenue is how much you're coming in. Your income is what did you make at the end after you paid Uncle Sam, Mrs. Sam, all the Sams, and all the municipalities. Okay, so now your revenues again is money coming in, and it could be you could have investments, you could have customers coming in, accounts receivable, whatever. It's how you get your money in. Different streams of income, finance, different ways I'm getting money. Okay, okay. Net the income losses. Make sure you know revenue that's left over or depleted, for lack of better words, that was spent or utilized for the operation of the business, and also to take care of my shareholders and stakeholders, and especially me to make a profit, so I have a comfortable living. Okay, goods sold. And remember, we're going to talk about this when we go later on. This is a quick overview. Is how much goods I sold, what I paid for it, and what kind of profit margin. I think most businesses, retail, everything else, anywhere between 50 to 75. Furniture stores or some of the appliances that stay a long while, maybe a 300% markup on that. All right. So what you pay for and what you sell, two different costs. Okay, now here's the formula. Okay, I'm not going to go into it. We talked about it. And here's your growth, how much earnings or buying or making, selling merchandise. That's your gross, not your gross. Okay, how much to earn by buying or making or selling merchandise. Okay, I'm done with this. Let's go into our balance sheet. Our balance sheet, it has to balance your equity, your liabilities, and equity balance. So what's the balance sheet? Let's go on here. What a company owes on a specific date, listed assets in order liquidity. Most liquid is first, and then later on you list your liabilities, for lack of better words. Okay, so you have your assets, current assets. We talked about this. I'm going real quickly within a year. This is what you should remember. Liabilities, what you owe. You remember accounts payable, notes payable, bonds payable. I'm not going to get into detail. You have it here. Stop me. What does it say? Read it. The more senses you utilize, the better you are. And owner's equity is basically how much you're worth. Is your assets equals liabilities plus owner's equity. A lot of people have a lot of stuff, but they owe the banks everything, so their owner's equity could be zero, even if they had the facade that they're very well off. Okay, and then you look at the book value. This is what your actual value if you have to sell something, and the market value. I'm a dyslexic. I turn it around. Okay, market and book value. What could I get? The book value could be sometimes lower. This is actually if I sell it outright, but the market value, because I got good name recognition or anything else, my product could be worth more. Look at the market value of Apple. Though Apple's going kind of down now because they haven't come up with anything new. All right, and market to book ratio, we talked about that, and enterprise value. How much is your enterprise worth? Okay, real quickly, look it up. I want you to start looking up these terms. All right. Oh, it's a reminder. These terms you should be comfortable with. I'm trying to keep this under 20 minutes. Okay, cash flow. Remember the three statements that I need: balance sheet, income statement, and cash flow. I can have a general good idea of where the business is running at. Cash flow, how much money you have. In your own layman's terms, what's your checking account? If you run out of cash, yeah, what am I gonna do? I got a car broke down. I don't have any cash in the checking accounts. No cash in the savings. There's no. I don't have anything liquidity. I could turn over the cash. I might have to charge. I might have to go to my parents. Have to go to my friends and borrow some money. Okay? So, and why do you need the cash flow? It pays your operating activities, investment activities. You have different, you're right. Look, a lot of businesses have extra money. They don't have to give it back to the business, especially a small, partnership or LLC. They'll say, hey, let's invest this in our competitors. Let's invest this in some other stocks or penny stocks that we think could have growth potential for the company. If we lose, okay, we write off as a loss. If we gain, we have money coming in on that, all right? And financing activities. You need cash to get your business done. Either you got to pay something to somebody, you know what I mean? Unless you're going to take it on a loan or anything else, but then you're paying a maintenance fee for them to give you the capital to utilize. Remember, in finance, debt financing or equity. Debt means I take a loan. Equity, I have something of value I could sell and bring some cash. I don't owe anybody. Okay, and the biggest thing is particularly challenging small seasonal business. We kind of discussed that, kind of makes sense, and ability to pay your bills in time. That's all it tells me. If you run into a crunch, could you pay my bill? And it's not only when you're looking at bills. People look at bills and go, "Oh, bills, you have to pay the banks and all that." No, you got to pay your employees. You got to pay your taxes. Those are all bills. All those things will shut down your business. All those things will take is part of your expense that you have to incorporate it into your overall pricing, your burden cost. How much is it going to cost? How much money? Where do I have that money available? Do I always got to borrow money? Do I get a line of credit? Do I put some retained earnings? I got some money this year. I know, but it looks like the summer is going to be a drought season if I'm doing something, or the China thing. It may drag on longer. I got to find another venue, another supplier, and he or she's charging a little bit more. And how do I want to offset that? Okay. Okay, so financial ratios. Now, when I look at ratios, you have to compare ratios to a certain industry. If you're going to look at my body mass, my age, to a teenager, it's going to be completely different. Got more energy, got more stamina, got more muscle build or whatever. You know what I mean? So they're more motivated. They're newer energy. Where I've been already kind of depleted at the end on there. So they'll compare my body, my weight, my blood pressure and height and everything else, compared to someone comparable to me, my body build, my age, and everything else, to see that I meet what they call the norm as a standard. Okay, so these are all the ratios. Okay, so you look at liquidity ratios again, ability to pay short-term debt, or what they call an asset test, real quickly. Current ratio, pay its bills on time, divide the current assets by the current liabilities. Your basic bills, and remember, this is all accounting. All I'm doing is just remember, in finance, I don't create the numbers. The numbers are given to me by my accountant, or QuickBooks, or systems that I have that generate me ratios or generate me some of the information. I look at that and I go, what do I do? Same thing when you're driving a car. You see that hot. Did it go way past that mark? Nah, it's a hot summer day, so the engine is going to run a little hotter. I don't have a problem. Now, if it's a real cold and it's running hot, I know I've got an issue with the radiator. So they're just indicators. The ratio tell me here's what I should be looking out. Is it within the parameters that's acceptable? That's finance. Okay, all right. So you've got leverage ratios. There's a debt to owners equity. How much do I have the debt? After a while, I run out of a collateral because I owe more than what I own. You know what I mean? So then my rates go up higher and everything else. Okay, profitability ratios. I'm making return on my sales, return on my equity. Found in a balance sheet and income statement. You learn that in accounting. We just look at those numbers and we say, it's not that good. How do I change it legally? That means I have to understand the components and which areas could I control. Some are outside factors I can't control. Interest rates going up, the trade embargo with or tariffs with President Trump and the Chinese leader. What the heck? I can't control it. I have to be able to minimize it, and that's what finance does. What am I going to do to minimize it. Remember, it's out of my control, but I can control some aspect. Maybe I don't have to buy from China. Maybe I'll buy from Mexico. But now Mexico, you got the southern border. There's another issue. So where am I buying from? What are the ports of entry? European Union, maybe UK, maybe Vietnam. Right, there's other countries that are making a product, and I'm a buyer. I'm a buyer. I'm not selling. A seller is a little different. Yeah, I want to get into the Chinese market as a seller, but they won't let me in. So let's see what happens. All right. I'm just a pawn in business, but I had to be a financial pawn. How do I look what's going on, look here, and how do I position my business so I minimize my exposure, I minimize any kind of negative, but I'm trying to maximize my positive or put me in a position of, ooh, I made all right, I made a good decision move. Chess, you move things around to make sure you know, not right away. I got to do two steps, but once I get there, then I got it. And that's part of finance. And most of you are doing that now. Paying your bills, going to school, managing a family, management other kind of debt, managing an expansion, new job, new location. All those things you have to come into how you're going to come up with finance. Do I borrow or do I save, knowing that's coming up there? Or we call retained earnings, okay? Now, so I have that. What else did I hit? Okay, activity ratios, measures effectively manages turning over an inventory. That's one of them, and that should be inventory turnover. If I look at inventory, we have a whole chapter on that. I have to buy the inventory 6 months in advance. I want to make sure I get the best deal. In 6 months, it may not be popular anymore. So you see, I have to do that utilizing statistical models that we'll talk about, the author talks about, but also utilizing my gut, my intuition. I know, I have a feeling. Something that tells me, say, this is right. Remember, in business, I try to tell you not to hunches, but you utilize your intuitive ability and expand that intuitive ability so you could kind of say something's not right here, and now you start looking at it from a logical sense and try to break it down. Ah, now I see what's going on. Well, maybe I don't want to take the gamble. That's where you have your statistics, your probability that an event will happen. All those things. If it's 90% probability, okay, it's probably happened, but it could be off. Look at the election. People didn't think Trump was going to win, and look where he came out. What the heck? An underdog, for lack of better words. Remember, polls, statistic, analysis, everything tells me what happened in the past. Could I utilize some of that information to the future? But I have to look at some of the variables are changing in the future, and I have to make some kind of adjustment. And some of the adjustments, there's a lot of software, there's a lot of models that will take that adjustment. But the bottom line, yes or no, you have to use as your own intuitive, your your insight. Your I can't explain that. Most business people, entrepreneurs, or buyers, they got that intuition, and they're 90% on time. Sometimes you're off, but all right, try to utilize, try to develop that, and then look at the numbers, and then try to look at it logically. So now you're using both of those, right and left brain, and now you're unbeatable, invincible. Okay. All right. So now, so we have other financial statements, and then this is stockholders' equity, management decision making, and those are things. There's programs out there to see how responsive this management is. Do they wait till it's too late? Do they see an opportunity or see a threat and able to adjust to it? By utilizing SWOT or different decision models that they have at their disposal. And one of the indicators is your financial. Your money starts going down. Customers ain't going down. Stockholders ain't buying your product. What the heck? You're going down. Something's going on. This whole thing. Your demographic and niche you're going is moving away, and new niches coming in. They don't like the way your store is. They don't like your operation. How do I adjust to those factors? Or do I wait till I come too far and I can't get out? I'm under so deep that I can't get up. I want to go. I'm going down. I got my head above water. Let's make the adjustments so I can come back up. That's what finance is. All right. This is what you're doing for this chapter. All right. I think I covered everything else in here. Let me just bring this down. This is remember, this is all a repeat. Start making sure you use the book, use the software, get used to it, because as we're going forward, it's going to be harder and harder. The book's going to be a little bit more challenging, for lack of better words, to read. But it's the same book they use as a four-year university and sometimes at a master level. But I'll try to bring it down to the conceptual ideas, or at least the concepts that you understand. Let's see, format tab. That's not what I want. Hang on a second. You tell you can't do two things at once. Living proof of that. Expand. Okay, level one. All right. So what I will basically do, you have everything else in here. Again, thank you for signing up for this class. This quick overview. Read the book. Do the software. Do the exercises. Get used to it. As I said, the concepts get high. It's not harder. It's just more factors involved that change that number, more influences that you have to add in here. Because now you have got, so this way, it's not just me putting on weight by eating, drinking pop. I also drink, too much sugar, less exercise. All those factors, I have to look at it as for me to reduce weight. And it's the same thing in a business. How do I financially? I'm sinking. I'm bringing in too much expensive and less revenue. How do I turn around and have more revenue and less expensive? And that's whether you like it or not. And look at what's going on with the administration when they're trying to do renegotiating. Whether you like the Trump administration or not, he's renegotiation contract. Sometimes there's a little cycle I got to hit on, but if he renegotiates, it's a favorable thing where I could open up more market. In the long run, it'll work out better for me. Same thing when they come in and they redo the whole street. Business is down for a few months, but once they do it, business picks up, and hopefully it'll pick up and stay for a longer point. So you have to understand the forces outside, what's the government doing, what's the international doing, what's the people doing, what's going on inside, micro, macro economics, the banking industry. Welcome to finance. You'll love it, all right? This is a challenge. And again, you're as successful as you're aware. You have the data at your fingertips, and this class will help you find it. Again, my name is Dr. George Mochocki, Management 218, Chapter 2, an Intro to Financial Statement Analysis. You already had that. Just a quick review. Talk to you later. Let's see how many minutes I got on this one. Ooh, 16. I'm doing good underneath 15. The department here, Cafe, will be happy with me at Harper because they say you only could, students, anything over 15 minutes, you lose their attention span. I said, hey, they can pause me and come back. Most students, once they pause you, they don't come back. So everything you have. All right? Goodbye, and I'll see you in classroom.